Thinking about buying your dream home, or even just your first place, can feel incredibly exciting, but also a little overwhelming when you start to consider the financial side. You might be wondering, what is the ideal financial benchmark to aim for when saving for that crucial first step? When it comes to a realistic down payment savings goal, many financial experts and lenders recommend aiming for 20% of the home's purchase price. For example, on a home costing $300,000, a 20% down payment would be $60,000. However, it is also important to know that down payments can range significantly, from as little as 3% to 10%, or even up to 25% or more, depending on your financial situation and the type of mortgage. The reason why 20% is often highlighted as the ideal benchmark ties directly into mortgage costs and conditions. Making a 20% down payment allows you to avoid paying for private mortgage insurance, often called PMI. This is an additional monthly fee charged by lenders to protect themselves in case you default on your loan, particularly when you have less than 20% equity in your home. By reaching the 20% threshold, you eliminate this extra expense, which can save you hundreds of dollars every month and significantly reduce your overall housing costs. Furthermore, a larger down payment generally means you will borrow less money. This not only results in lower monthly mortgage payments, but can also lead to a lower interest rate on your loan because lenders view you as a less risky borrower. It is a powerful way to build equity in your home faster and reduce the total amount of interest you pay over the life of the mortgage. For instance, putting down 10% instead of 3% could save you tens of thousands of dollars in interest alone over a 30-year loan term. To set your personal down payment goal, start by researching home prices in your desired area. Once you have a target price range, calculate what 3%, 10%, and 20% would look like. Next, assess your current savings capacity. How much can you realistically save each month without sacrificing essential needs? Consider setting up an automatic transfer from your checking account to a dedicated savings account specifically for your down payment. You might also explore ways to boost your savings, such as cutting discretionary spending or finding opportunities for additional income. While the 20% down payment is a great goal, do not let it stop you from buying a home if you are ready and can only afford less. Mortgage programs exist for lower down payments, such as FHA loans requiring 3.5% down, or conventional loans with as little as 3% down for qualified buyers. The key is to understand the trade-offs, like potentially paying private mortgage insurance or having slightly higher interest rates, and to weigh these against the benefits of homeownership. Remember that any amount you put down will reduce your loan principal and contribute to your financial future. Ultimately, your down payment savings goal should be a realistic and achievable target that aligns with your overall financial picture and timeline. By understanding the advantages of a larger down payment, while also knowing your options for lower contributions, you can confidently plan and work towards owning your own home, setting a strong foundation for your long-term wealth building.